Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to the state of Washington to talk with David Morgan of silver-investor.com. David Morgan, and welcome back to the Keiser Report.
Max, great to be back with you.
All right, David Morgan, the silver investor. First, you have the exact silver coin that Ron Paul recently held up to Ben Bernanke during congressional testimony. Tell us about their confrontation and how you came in possession of this coin.
Well, thank you, Max. This is the coin right here. Hopefully I got it in a good camera angle. It's called Silver Circle. It's some friends of mine that have a movie talking about the collapse of the economy and silver's role post-collapse. It's called silvercirclemovie.com. You can go to that website and check out the trailer. They gave one of these to Dr. Paul, and of course he held it up during that testimony. And there's quite a bit of news around that. On the internet, especially those that are, awake and aware from people like yourself, Max, that are telling the truth about the financial situation.
Right. Now, talking about silver and the Silver Liberation Army and Silver Circle and all these grassroots campaigns. Last year, of course, we had Crash JP Morgan buy silver. Now I see that some bloggers have taken up the cause. Tell us about buy an ounce, give an ounce.
Well, this is a lady that I know that does a very interesting blog, sherryquestioningall.com. She blogs on all kinds of things. In fact, she called me this morning with some updates that people might want to check out regarding Goldman Sachs and their position if the economy collapses. I guess the bankers get paid first. That's based on hearsay. I haven't read the article yet. But going back to what we want to talk about, buy an ounce, give an ounce. It's piggybacking on your buy an ounce and take JP Morgan down. And she's basically saying, you've got to understand that the physical realm doesn't equal the paper realm. Anyone that buys an ounce, you're deleveraging these bankers roughly 100 to 1. And that this is something you should own, and it's something you can give away as a gift. And also think of it as some kind of a situation to give something of value to somebody else, not only in maybe a barter transaction, but as a gift. So I like it. It's piggybacked again on what you started. And she has your video up there again, so maybe you'll start getting a lot of new people that wake up to Max Keiser. I can't imagine there aren't too many people that haven't heard of you, but you never know.
All right, now, David Morgan, you mentioned that the ratio of physical silver to paper silver is about 100 to 1, 100 times more paper at least. I mean, if you look at the derivatives markets out there, and then you look at the balance sheets of these banks that are not even counted in the overall look at what they're holding, the ratio is even more astronomical, paper to physical. Now, recently there was a smash of the silver price where 110,000 paper contracts of silver were sold in less than an hour. So how many ounces of this is there in 110,000 contracts? And is this unusual, David Morgan?
Very unusual. And Max, I'm just going to back up if you allow me, but Jeff Christian is the one that during the testimony about manipulation of the silver market testified before the CFTC that the paper to physical ratio is roughly 100 to 1. And we usually have Jeff out to the Silver Summit here in Spokane every year. And he had an interesting presentation last October, and he said, really it's not 100 to 1, it's 400 to 1. And he put up that chart. I actually have that for our members on the members part of the Morgan Report. But anyway, going forward, yes, the smash down, it was roughly 110,000 contracts, 5,000 ounces per contract. So you're looking at about 550 million ounces of fine silver, which is roughly 3/4 of the amount of silver mined in a year. And all that took place during one trading session on the CME. And yet the authorities just look the other way. What's so striking to me is the amount of people that get so upset by this, me being one of them, but yet they feel that they want to give up, that they have no recourse. And you can't control that, of course, because the CFTC won't control what their mandate says they should. But to me, I want to make the point that Eric Sprott, who started the PSLV, the Physical Silver Trust, recently did a shelf filing for 1.5 billion ounces. Not that long ago, they took that shelf filing down and they issued about $300 million to buy roughly 10 million ounces of silver. When that physical 10 million ounces of silver was bought, the price shot up from the point it was announced till it was collected, roughly $2.50. Yet it took 55 times that amount on paper to take it down the same amount in price. So I really feel that we're winning, Max. I mean, that again shows the point of what you started with, the buy an ounce, take down JP Morgan, this buy an ounce, give an ounce. It's all about taking a physical and holding on to it, because that is what deleverages the system. If it takes 55 to 1 to get the system down the same amount of price, it shows you that buying something physical really has meaning.
Well, as far as these grassroots campaigns like Crash JP Morgan, Buy Silver, or Buy an Ounce, Give an Ounce, that I've been involved with, I've really gone to school on Eric Sprott. Eric Sprott's the guy who has come to the market and said, look, here's what the annual production is, here's what the annual above ground supply is, here's what the demand is, and this thing is going to go higher. And of course, with Eric Sprott, we're not talking about buy an ounce, give an ounce. We're talking about a billionaire, one of Canada's leading billionaires, who's talking about buying $1 billion worth of silver at a time. Now, you probably have more, well, I know you must have more contact with Eric Sprott than I do personally, but is he, you know, I think of him as a silver vigilante, like a Clint Eastwood character going down to the silver pit, you know, and then just firing away at these paper of silver bugs. But do you get the sense that he's genuinely has kind of a burning in his belly to go after these paper bugs?
Well, he's never told me that, but he really talks about the banking system initially and how unsafe it is and how safe it is to own the metals. And that's really your only asset class that you can hold outside the banking system where you're not exposed to these banking problems that exist. So that's number one. Number two, yes, he sees the silver, similar to I see it, as probably the best investment over the next 10 years. And then he goes through his numbers, which are very similar to mine, and his reasons why, which again are similar. And I really do believe that he put out this shelf filing just to have the ammunition ready to fire away. There's $1.2 billion left on that shelf filing. So, you know, at the time, I forget the price, but he could have bought roughly 50 million ounces of silver. He's only bought 10 million so far. So I believe that anytime silver gets in the under 30 range, he's probably going to take a shot at it, meaning he's going to buy more physical. So I see it as very bullish, as I said, and I think that we are going to win.
All right, let's talk about that other precious metal, gold, for a second, because there's some very interesting cross-currents going on and some international dialogue happening based on what we've been saying on this show for quite some time. That is to say that a lot of the European central bank gold is not held in these European central banks. It's held in U.S. Federal Reserve Bank in New York as one of the main repositories for German gold, for example. So now they're starting to freak out in Germany that, wait, we want our gold back. And we see this all over the world. Venezuela repatriating gold. We see repatriation of gold now being talked about in Switzerland. What's this trend all about, David Morgan? Are these countries finally waking up to the fact that if they don't have the physical in their vaults, then they don't have it?
Well, exactly, and I think you were instrumental in getting people aware of that, and now they're following through with action. You know, it's all this gold's not money. I mean, Bernanke testified. I think Ron Paul asked him about gold, and he said, well, it's a tradition. It's not money. Regardless, banks know what it is. In fact, if you go back in history not that long ago, I'm going back roughly 10, 12 years, the Bank of International Settlements, the Bankers Bank, you actually used to be able to be a stockholder in that. Now that's a totally private again. They used to account for every asset in gold only. In other words, they didn't care what member bank. Again, this is the highest bank that exists, at least to my knowledge, unless there's some black bank somewhere that no one knows about. Bank of International Settlements accounted for everyone in gold only. So they know what it is, and they know how to account for it, and they know what it means. And these countries do as well, and they're scared. And again, I think you were instrumental in getting that started. And now these banks are getting worried, and they say, you know, if something really takes place, we don't want our gold sitting in the New York Fed. I was in New York, a couple of years ago, had toured the Fed, took some photographs, did a little video for my members, but I'm on the street walking on the sidewalk, and as I'm walking right past the Fed there, I'm thinking to myself, you know, I'm walking over who knows how much percentage of the world's gold right now, and how many people are even aware of it, and how many people realize what a small, you know, surface area this is relative to the whole planet. Gold is rare. Gold is scarce. Gold is valuable.
Right. Now, you mentioned the BIS, the Bank of International Settlements. They also came out with a report last year as a recurring, ongoing look at the positions in the derivatives markets, because they try to keep track of these markets. And that's where the data came out originally about J.P. Morgan's 3 billion ounce of short silver. They've got a balance sheet that looks like Mount Vesuvius the day before it blows up. If silver gets over 50, J.P. Morgan stock is worth zero. That's what my work tells me. What do you see on that front, David Morgan?
Okay, well, not to pick an argument, Max. First of all, everything you said I agree with. Secondly, I mean, they're totally insolvent. They're totally broke right now. I mean, they are absolutely insolvent. So how do you blow up a bank that's totally blowing itself up already? It's just no one seems to realize it other than those that follow work like yours. But what will happen if it goes above 50 or 100 or whatever? In my thinking, it'll just be another too big to fail. They'll print up more funny money and try to cover it over. But I think that's very relevant of what eventually will happen. I think more importantly is it doesn't have to get to that price, I think, for enough people to wake up and the whole financial system to crumble in other areas. I mean, this whole idea that you can have that much of a short position is ludicrous. I'm actually okay with hedging. I mean, all of my coin dealer, bullion dealer friends need to hedge in the market because it's a margin business. So they've got to hedge off their daily activity, and a mine might hedge off a year or so, but to hedge off like 5 or 6 years of total global supply, and when you see what they have in the public domain as far as how much silver they have, it's pathetically small. I mean, this is just ridiculous. And again, I go back to the authorities. I mean, where are these people? You know, it's obvious what's going on, and yet they've been looking at this thing for years now and have yet to make a statement. And then this happens just recently on the last Smashdown. Again, no comment. I mean, I think the people have had it. The people that are awake and aware have certainly had it, and it just frustrates me.
David Morgan, we're out of time, but we'll speak to you again soon. Thanks so much for being on the Keiser Report.
Thank you, Max. It was a pleasure to be with you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, David Morgan from silver-investor.com. He is the silver guru. Make no mistake about that. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.